All right. Good morning and happy holidays, everybody out there. Thanks for joining us for another episode of Daily Live with the Mortgage Calculator. We'll try to make it quick today due to holidays. We are a lender and broker that operates over 35 states with over 300 loans. If we go over any of the loan programs that you'd like more information on, please get with one of our team members or drop a comment or go to our website. We'd be happy to connect you with a licensed loan officer to get the full breakdown. Today, we will be obviously checking out our live rates on all of our standard programs, but we'll also go into a deep dive example I have pulled up here of our DSCR Second Mortgage loans. So these are kind of a new product that have just come out. We've been doing a lot of fixed rate second mortgages. We did an episode a couple weeks ago, I believe it was last week actually. We do have non-QM options. And today we're looking into our DSCR options. So it looks like we are live on all the platforms. I'll go ahead and get started for today. So again, thanks everybody. Kershey, I'm the president of the Mortgage Calculator. We are a lender and broker that operates in over 30 states with over loan officers. So if you'd like a full itemized fees that go into any of these quotes that we go over, please reach out. We'd be happy to assist. Let me go ahead and change my screen and we'll check out today's live rates. So we always want to put things into perspective here. So I have the 10-year treasury pulled up. We see definitely some good news here as the 10-year treasury is definitely a good thing to track for interest and helps us track all of our programs. So when the 10-year treasury goes down, we typically see rates go down across the board here. So definitely in the last 5 days as we lows for this period, but we also want to put into perspective that we are still at 1-year lows. So even with the daily fluctuations, we're definitely in just a year ago. And we also even hit the 3-year lows in some examples as well. So definitely time to be out there getting quotes and shopping for a new home. And now let's get into our live rates for today. So here's all of our standard loan programs. If you go to our website, check this out and update it in real time. What we have here is a standard scenario: single family home, $500,000 purchase price, $300,000 loan amount, 60% LTV, 160 estimated credit score, 40% estimated close value, so that we can compare apples to apples across all the different loan programs and get valid rates for all the options. Here, first up, our conventional primary home. This is what most people think of when they think of a mortgage, Fannie Mae, Freddie Mac. Rate coming in much better than last week, 5.625 rates, 0.881 for our conventional primary home. And we typically compare that to an FHA if our customer has any trouble qualifying for a more leniency on credit issues and a higher overall DTI, and does require a little more fees there in yearly mortgage insurance. So FHA comes in at 5, but the final APR is 5.994 with all of the fees and mortgage insurance included. That is a touch higher than conventional, so always compare the across the programs. And for our borrowers that are VA eligible, our active duty service members, our VA eligible borrowers, and surviving spouses in some cases here, we have rates for our VA programs as low as 5.25 and the final APR 5.47. So notice the rate is a touch higher than FHA. Obviously, a lot of benefits there in the VA program, so the final APR is much lower. So definitely a better option for our eligible borrowers. And the final government option programs for properties in USDA eligible areas, typically the rural areas of the country. So if the property is eligible, this is a great option to compare. USDA at 5% flat, final APR 5.698. So we'll typically compare that to FHA or traditional. As you can see, the USDA option is coming in as an example, so always good to compare that. And now we'll get into some of our unique non-QM options. That's one of the things we love here at the Mortgage Calculator, providing alternative options here. So our non-QM alt doc options for our primary home allow us to use bank statements, P&Ls, 1099s, etc. to qualify if they don't qualify under conventional loan program. So here we can get a rate as low as 5.875 using bank statements, etc. And the final APR comes in at 6.145. So just a touch above conventional. We were actually almost identical before, but now this is more typical. We're just a touch higher cost than conventional to use alternative docs. And we can use the same alternative doc options, bank statements, etc. for an investment property. So rates today for investment properties coming in at 6%. Final APR 6.321. Compare that to our conventional options. Conventional property coming in at 6% flat, same rate. Final APR 6.311, so a touch cheaper. So conventional, then use alternative docs, but very comparable there on investment properties, even more so than the primaries. And one of our favorite options here, and obviously for today as well, these are DSCR First Mortgages. DSCR stands for Debt Service Coverage Ratio, no income or employment information needed. We simply use the estimated rents from the property. Determine a DSCR ratio. If the estimated rents can cover the PITIA of the Mortgage Insurance Taxes Association, then that is a ratio of 1 or used for all these examples. So if we have a ratio over 1 and we add a 3-year prepayment penalty, which is pretty, our rates today come in at 5.999, 301, which beats conventional. Amazing. And we can even add a 5-year prepayment penalty to sweeten the price a little bit there. So our DSCR first, the 5-year prepay coming in at 5.875 today. Final APR 6.169, which in a bit. And there are options. No prepayment penalty. You see here rates as low as 6%. Final APR 6.32. Our option with no prepayment penalty, just a touch more conventional. And we also have, which we'll go into today. These are our standard options using bank statements, 1099s, alternative or full doc. So for our primary home, we can do our fixed rate for 7.75 rate. Final APR 8.055. And for an investment property, we can standard second mortgage options, rate 6.25, final APR 9.048. But what we're going to go into today is a specific of our second mortgage options for DSCR, which is a very unique twist to these fixed rate second mortgages and a new option that was just recently added. So if you can obviously scroll down and see all our different loan programs, and feel free again to click the link there and get a full breakdown. One of our licensed loan officers will contact you. But let's get into our deep dive for today. Our second mortgages. So first up, I wanted to identify an actual property so we can actually put this in perspective here. So I saw this listing here in my local area, listed for 500. Like there's 4 identical, so this would be a great option for our investor out here that just bought some brand new properties. They're trying to sell them, or perhaps they wanted to keep them and some cash in order to get them in a better spot. So in this case, this is a great example. Property, but this investor could use it for. So we're going to use a $537,500 estimated value and say, hey, if you can't sell it, get you some cash out. So example here, we're going to go for the maximum cash out. So this is going to be the highest cost option. So to use our non-QM DSCR second mortgage for the max cash out of 80% loan to value overall for this property. A couple things we assumed. We're going to have investor has a $300,000 first mortgage on this property. We're going to assume the value they put on the sale is the actual value. We're going to take it to a maximum of 80% loan to value to use a 3-year prepayment penalty. So you can see there a little lower on the page what the rates are here. So the lowest rate option for the max cash out, 9.375, costing 3.475 discount points and costs. And we can go to a 0 cost or par rate option here, no discount points here, at 10.625. Perspective as I present the next couple options that may be more reasonably priced. Maximum cost option for the maximum cash out. So again, we're going to go with a 537 appraisal value, assuming the sale price is. We're going to assume a $300,000 first mortgage allows us to get 80% cash out. So our investor here can get $130,000 cash out maximum. A little bit higher rates here. But if they need the cash, and especially since they have 4 identical properties next to each other, that's over $500,000 if they do all 4 there. So a great option, hopefully, for our investors if they perhaps can't sell the property, get some flexibility there. Now let's go to our next option for more reasonable, a 75% cash out instead of taking it to the maximum. And you can see here the rates get a little more reasonable. This still has a 3-year prepayment penalty, which is pretty standard. So we can get rates down to 9% in this case, cost as the other option there, 3.475 in discount points and costs. And we have a par option almost almost par at least, 9.875 as just 0.25 discount points in cost, so nearly a par rate there. So this is a great option again. Our borrower doesn't quite need as much funds and wants to get a more cost option here. Same assumptions, 300,000 first mortgage, taking it to 75 LTV. This investor to get 103,000 cash out in this example. And my final example here, the most reasonable option that is typically requested. Again, obviously, LTV to much lower, but in this case, LTV wouldn't get as much cash. So what I presented here as the final option for probably the option that if this was my investor would probably go with. The most reasonably cost would be the fixed rate second, cash out to 75 LTV, and adding a 5 repayment penalty to sweeten the price a little bit here. The price dropped a little bit more. Now we can offer 8.875% rate for 3.475 discount. Expensive, but a good option here, 9.75 rate, 0 discount points in cost. So that's our par rate option here. When we put a more reasonable 75 and a more, aggressive 5-year prepayment penalty. So these are great options again for our investor to access some cash, perhaps if they were to sell the property. So these are very common requests from our investor as the market is a little bit stagnant. A very common request, and we can do it for properties that are listed as or at a prepayment penalty. We can typically still do these properties that are listed in this example. So great out for our customers that may not be able to exercise the price they want at this time and can exercise these options. Another cool thing about these loans, if we're not cash out, so anything over $250,000, we have to do one of these smaller amounts of cash out, such as this example. We can even use some of our automated products and not have to do an actual standard. Of course, if you want the maximum values, you should try to get a standard appraisal on these. So these are very cool options, afford a lot of flexibility for investors out there. So that close us out for today. So I want to try to make it quick. So thank you for joining us today. Happy holidays. Good luck out there house hunting. It is a great time. We are at 1 year and even in some cases 3-year lows on mortgage rates. So hope everyone has a great